Okay, can you still see the charts okay? Everyone still see the charts? Okay, great. So let's just start simple. 70% of volume is between the value area low and the value area high. This does not correspond to the high of the day, the low of the day, or necessarily with any pivots. And that's all based on the volume histogram and volume distribution. Now the value area high, point of control. Oh, listen, what I'm going to do, GH, is I'll take all the questions at the end rather than, because a lot of people are asking. The calculations, here's the problem with different market profile indicators. And what we did was we took a couple of open source market profile indicators and we actually purchased a market profile indicator and we overlaid them on our market profile indicator. And what we found was that there's a fairly disparate distribution of the value area high and value area low numbers. They all easily calculate the point of control, but the formula you use to calculate the value area high and value area low, one is really undefined. What we did was we looked through Google and we looked at all the volume profile, market profile. I mean, Market Delta puts out a lot of information. Sierra puts out a lot of information. Multi-Charts does. They all define value area highs, value area lows, and in a very roundabout way go into how they're calculated. But they don't go into the coding and how they're determined. And that is very, very critical because within this histogram, there are areas where 2 bars in a row are going to be equal. And down here, they're going to be 2 bars that are equal. When you have 2 equal volumes at different prices, how you calculate that in is going to affect how that 70% comes out. So what we did was we created a couple of versions. And if you're in the live trading room, I had different versions up and really didn't send it out to any of the people trading the software until we determined what formula actually created the most accurate value area high and the most accurate value area low. And we absolutely have it. It's a complicated calculation, but it gives you very, very accurate readings, and you're going to see how price action behaves just based on these. So these act as strong areas of support and resistance. Now, obviously, the point of control where most volume sits is going to act as an area of resistance to the upside or resistance to the downside, support. I'll get it right here. When moving to the downside, it's going to act as support. Upside, it's going to act as resistance because there's a lot of buyers and sellers sitting there. We already know because so much volume is traded at that price. So you don't ever want to trade into the point of control. But if you break the point of control and then retrace back to it, it acts as a great area of support to the upside. If you break it to the downside, retrace back into it, and then move down, it makes it a great area of resistance to the downside. And that's exactly the same thing for the value area high and the value area low. Price desperately wants to remain within that 70%. And when you start getting to the value area high, you reach an area to the upside of upside resistance. If you break the value area high, retrace back to it, you can take a continuation long. If you break the value area low, retrace back to it, then you can take a continuation short. There are certain instances where you may just want to take a break of the value area low, a break of the value area high, and take it as a breakout, but we're not breakout traders. We're retracement traders. Now, the thing about trading market profile is you have to trade with the trend. And you see, when this sits in isolation, you don't really know where the longer term time frame trend is. And that's very, very important. And that's why you need the whole platform, because that's going to tell you where the trend is. But let's just look at how price behaves in a couple of instances. Now, right here, price just walks right through the point of control. And so, listen, it's just like areas of any, it's just like any area of support or resistance. Sometimes it breaks, sometimes it holds. And if you look right here, here is the point of control. Just hold on 1 second here. He's going to have to call me back. You can see how price keeps challenging the point of control, but it just won't break it. Eventually, it does. But you can see how it acts as an area of support. Now, right. Hold on 1 second. Just let me tell this guy I'm going to call him right back. I'm sorry. Yeah, hi. Right now I'm giving a webinar. Yeah, but I'm giving a webinar right now. Just go to Relay 4, Right Line Trading. There's about 60 people in the room. Don't know what to say. I got to get back, though. I just wanted to get, all right? Sorry. Okay, that'll look good on the recording. But anyway, you can see what happens when you move up to the value area high. It retests, it fails. It retests again, and then you have a nice short. Same thing here. The market breaks the value area low, retests again, and then you have an enormous short. So that's how the value area highs and the value area lows work. Price wants to stay within them. And what I've seen in the live trading room, and we've only had the market profile integrated into our trading in its final version for really 1 day. And on Friday we had 3 winners and we had no losers in the room. And the market profile was very, very important in helping us trade. Was that you just want to give the trade lots of room to run between the point of control and the value area high or the value area low, or break that value area low and let it run to the downside. You really want to stay away. And I'm going to try to find an area when volatility is low, these areas narrow, and it becomes tougher and tougher to trade when they start sitting on each other. Just like you're going to see how the pivots come together, so does market profile. And let's just take a look at a couple of other setups. Now, it's hard to do by looking at the market profile in isolation, because you really need to look at the long-term trend and you need to look at other parameters. But I just want you to see how in isolation, how well it really does. Now, right here, almost on the right edge, you can see how well the value area low acts as an area of support. Now, we don't know if these are valid entries, but if you took any of these, you're not going anywhere. And here's another problem with taking a short through the point of control. The candle tries to make it through and doesn't succeed. And ultimately, the point of control turns the market up to the value area high, which turns the market back to the point of control, which is tight to the value area low, which turns the market back up. So if you're trading these areas, and we have to move over to the right edge to see where the market profile really is, where it is live. It's very, very tough to trade. And you can see right here how well price respects the value area high. And if you're trading up and you hit it, you bounce. And you go all the way down to the value area low. And here's what you're looking at. There's the move to the downside, the retracement back, and there's the continuation. I don't agree. I think the point of control is helpful. I think it acts as a strong area of support and resistance, and I'll show you trades that I took in the room off the POC that were very successful. I think it's a very strong area of support and resistance. Now, you can't trade this in isolation. You must have a longer term trend because you don't ever want to counter trend trade. But here's another trade. There's the move to the downside. There's the retracement, and there's the breakdown. This market profile is simply based on a rate range. The market profile will work with any time frame, any type of chart, any type of bar. And we have one of the few market profiles, and we spend a huge amount of time to make this work, that will work with Renko bars. Renko bars are a tremendous challenge because they don't have wicks. Time charts do, tick charts do. Renko bars, the formal Renko bar that's in NinjaTrader only has a brick. This market profile will work with a Renko bar. A lot of them say they do, but a lot of them don't work. Ours does. So what I want to do, now that you have, I think, a pretty good idea of what we're looking at with market profile, is I'm going to drop it. I may have to, all I'm going to do is just go to the template. I'm going to load the full 8 range template right onto the chart. So now we have the chart in context. And let's take a look at a full day of trading. So now we have the market profile in the context of trend. And also, now I don't know why this happened, but I just have to fix this because we have the quant line should be in 2, and the volume, this should be at 3. Because right now they're sitting on each other. Okay. Here we go. So now, what we're looking for, now take a look at price action right here, and let's move it over a little bit to the right edge to make it as accurate as possible, because that's where, and take a look at this price action. Now, if you try to trade this, look how well the volume area low holds up price on crude. It just won't let it break. Now, this is a valid trade to the downside. You have a move up and you have a retracement, but you're very tight to the value area low. Here's another one. You have a move to the upside, a move to the downside, a retracement, and a move down. And you get, what you take is loser after loser trying to break the value area low. It's very tough. And this pink background bias tells you that 2 higher time frames are also to the downside. The fact that the candles outlined in red tells you that order flow and momentum are with you on multiple higher time frames. So everything would tell you that if the volume area low is going to break, it's going to break especially with this retracement, because this retracement is right into resistance. This is really tight. Now, it just doesn't go. Now, to make things a little more Correct, Jerry. Remember, when you're trading, you're looking at the right edge, and the dynamic lines are always moving. So if you look at this chart in retrospect, and you want to do an analysis of where the VAL, VAH, and POC are, you always have to move them to the right edge because the lines change. Now, the one thing about these trades are, this is our quant line, and this tells us what quantitative markets. There are 5 markets that move either in the same direction or the opposite direction as crude with a correlation coefficient of 0.7 or greater. So if crude is moving down 70% of the time or better, the markets assessed by this quant line is also going to be moving in the appropriate direction. Now, you don't have a quant line confirmation on this trade or on this trade, but you do have a quant line confirmation on this one. And it still does not break the value area low. And if we move it over, we can see just how tight. See how tight that trade is to the value area low? Now here's the swing pivot. Remember, I told you that swing pivots oftentimes correspond to value area lows. This contains 70% of price, and this is where price changed direction previously. So you've got and what we did is our pivot sensitivity indicator is up to 200. So what we're only doing is looking at major swing pivots, and then they both correspond, and you just stay away from this short retracement, this continuation short trade. Now let's take a look on the right edge. Again, right here, you've got this value area low. Now I tried to trade this. I took a loss. No, I took a small win here. And I took a loss here because we were still working on assessing the market profile, and I just had enough space to make a first target, and my retracement here was right into the value area low. Now, I'd never take that trade again. It's a tremendous filter. You want to trade areas where you've got a nice space, and you're going to see the 20 and 30 tick trades are the ones that occur with a lot of space. Now, I've really backed off on the validity of pivots because the value area lows and value area highs are there was one day this week I sat until 3 o'clock in the morning and I looked at the trading. And if you look here, now 2/3 of a candle is a break. So you have a move here, you have a retracement. Now I don't know the modified 15 here. Here's the candle. This is the entry candle right here. It's a little bit of a chase because this is the candle that breaks the 15. But you can see this is the candle that breaks the value area low. And when it does, it runs, and you know you're going to get a nice trade. And let me go to another one here. See, and this is where, I know somebody mentioned that the point of controls is not important. But you have the same thing here. And the thing that I want you to do is, now the correlative market here was read on a live market. It's a fractal indicator, so it readjusts when we reopen the chart, and it always readjusts to the right. It's going to take out a bar. But here's our break of the 15. This is a valid entry. You see it has a dot, and you can see it just about breaks the point of control. Not quite. Need another tick or two, but here you have so much, and it goes down, and here's your perfect trade. Your break, your retracement right into your value area low. You've got the correlative markets with you, and this line that I'm looking at is really important. When you have this with you, it really increases the predictive value of a trade. when you have the correlative markets. There are 5 markets being assessed in this line. We have 3 lines for the E-mini, the Russell, the Dow, and the NASDAQ. We have 2 for bonds and notes. We're trying to get a third for crude. We just can't find enough correlative markets. But you see what happens when you get below the value area low? This is where the trade just flies. And that's a gigantic trade. Now, this is an oversold trade, but because now you're below that value area low, you have nothing below to stop the trade. This is why you never want to trade tight to the value area low, point of control, or value area high. You wait for these trades. And if you're patient, you trade a few markets, these are going to come. And these breaks and retracements, and if you move it over to the right edge, you're going to see how tight it is. It's very tight to the point of control, less than a candle. Correlative market, pink means the background bias tells you that the trend is to the downside on multiple higher time frames. The candles outlined in red, order flow and momentum are with you on multiple higher time frames. And honestly, this is a gimme trade. It really is. You're not going to lose on this trade. I mean, for all intents and purposes, you just won't. There's too much. I mean, this has to break the value area low, and it's just very unlikely to do so. Now, nothing's 100%, but you've got a 90% predictive value in a trade this way. Here's another trade. Now, you see it doesn't pan out when you go to the right edge, which doesn't pan out on the right edge. And that's really where we're looking, on the right edge. And let's look for something. I remember I tried to trade into this into this congested area. In fact, I stayed away from this area, did not trade it. But look how hard it is. Here's a great setup. A move to the upside, a retracement. You don't have order flow in the momentum. The candle's not outlined in blue or green. It does eventually work its way up for a first target. But look how difficult. Look at the size of those wicks. I mean, look how hard it is to get through this. Why take this kind of risk on a trade to the upside? You got to break the point of control. The value area high is right there. Just a very, very risky trade. It's just something that you wouldn't take. And you really never clear the value area high. And bam, down it comes. Down it comes chasing you. And remember, you do have to honor these pivots, because the ones that we have on the chart are the major swing pivots. So you've got so much going on here. Just stay away from this area. Don't even look to trade it. I'm just trading the right edge. Oh, here's another trade I saw that I liked right here. Now here's a move to the downside. Here's the break. Here's a move to the downside. Now, what you want is you want your entry to be at least 5 ticks from the value area high. This is 8. So you're going to hit your first target before you wind up hitting the value area high. It's a little bit riskier, because what you really want is a big space, but it's enough here. And you can see it runs. Then eventually, when it hits the value area high here, it turns on the right edge. Let me take a look at one more here. Now remember too, when you trade with this kind of specificity, it's going to censor trades that are going to work. And it's going to be frustrating. The trades are just going to walk through the point of control or the value area high, and you're going to say, gee, I wish I was in that trade. Here's another one. A move to the downside. There's the break. Now here's the chase dot that allows you to take the trade. The correlative market is green. Order flow and momentum. Everything is there, and you have a really long trade. You just got to wait for the market to break this point of control. This does break it. You could enter on this, but you don't know it's going to. And you see how tough it is. And let's take a look at this big move to the downside right here. Here's really your great trade right here. On your retracement, your correlative market, your correlative markets are with you, order flow and momentum are with you. Now you don't have background bias, so it's a little bit riskier, but you're below the value area low and the trade just runs. Look how far it goes. When you give the market room to run below the value area low or above the value area high, and you got plenty of room, and you're trading with the longer term trend, the correlative markets are moving in the appropriate direction. Order flow and momentum are with you on the appropriate direction. These trades fly. And let's take a look at another one, and I think this one is right off the point of control. I can't remember. Here's the trade. Now, I swear, I'm not even sure if this one is successful, but you're not going to trade in here. This is all crazy. You got to wait. So let's wait. There's nothing here either. So let's wait. Now here's the break. Right here. Now this doji is really one tick away from a pullback. So here's the move up. Here's the retracement. And now you're 2/3 above the value area high. And up you go. Now you can see I'm not making this up. I mean, I'm just taking these trades right off the charts. And I'm staying away from these areas of congestion where the POC and the value area low are tight. And they squeeze the trade. Sometimes they run. More often they don't. When you're above the value area high, let it go. Let it fly. Now let me show you one other market. Let's take a look. You know what? I'm going to drag what's rapidly becoming one of my favorite markets, bonds. Now, nobody can successfully trade bonds. Now, they're $32 a tick, which is an enormous amount of money on a winning trade. But we trade bonds and notes in the chart, in the room. And take a look at this trade right here. On the right edge, right here. Now, here we have two correlative markets. And we want to trade dual reds. Red, red, both. I'm telling you, I know the correlative markets in here. I can't tell you because it's proprietary. But believe you me, when these both are red, you've got a tremendous chance for a winning trade. And when you have the move up, down, the retracement up, you're below the value area low. The trade goes. Remember, $32 a tick here. And this is a 3-range chart. It goes 4 ticks. But then you get the exact same trade again. Right here. You're below the value area low. Now you do have a pivot right here. But you've got space to the pivot for your first target, and then you really get a monster trade. And then if you want to take it again, you can take a third. Now, with the third retracement in a trend is always risky. But this, on this entry, and this entry, that's about $1,000 trade on 3 contracts or 4 contracts, and you're done for the day. You just traded below the value area low. We move it over. You can see that's here. And you've got both correlative markets. That's key on bonds. Whoops. You don't have to have them, but I'm telling you, you want to have them. Right here. And you can see you don't get them that often. Now let me just show you one other, and I see there's a couple questions, and I'll answer them. Let's go over to here, to the right edge, and let's take a look right here. Now here's the move up. Here's the retracement. The retracement is right to the point of control, which acts as an area of support. You're in. Now, in real time, you are going to get a green. You only have one green here, but this green line is going to extend one candle over in real time before it recalibrates when I close the charts. That's going to take you all the way up to here, and that's as far as you're going to go, because then you've got to break the POC and break the value area high. This is a very, very lucrative trade. At $32 a tick, 7 ticks, that's a lot. Well, you know, you take 2 off at 3, which we do is 6. 1 off at 4 is 10. And I don't know where you, let's say you take the runner off at 5, that's 15 ticks times 30. $32. That's a $450 trade. And that's really enough. And I'll show you this trade. This is a loser I took in the room. And really, I took this out of absolute frustration. I missed this perfect trade. I did have red, but I was in a way oversold market. And I only missed winning by a little bit. It went down 2 ticks. I needed a third. I didn't get it. But the market was way oversold. And I should not have taken the trade. It came back and it stopped me out for 5. And that's a lot of money. So you don't want to take any losers or chase the market too far to the downside. The blue vertical line, these are background bias. These tell you what the higher time frame markets are doing. When they're dark green, you've got all resistance to the upside broken, and the 50 and the 15 on 2 higher time frames are moving up. Price action and market structure on 2 higher time frames support a perfect long trade. When you have this color, you have the 50 and the 15 both pointed up, but you have areas of resistance to the upside still to be broken. And when you have this color on 2 higher time frames, you simply are above all resistance, but you don't have a 15 or 50 trend. This is the strongest. This is the second strongest, and that's the third strongest. Now, this one just tells you that you have no upside resistance, but you really are in essentially a trendless market, and you have the same thing to the downside. There's the 50 and the 15 with you, where you still have support to the downside. Here's our strongest area of support of down. This color, and this light color is where you have all resistance or support to the downside broken, but the 15 and the 50 aren't with you. So here's where you want to take your trades. You can see right here, let's take it all the way to the right edge. Right, this is a little bit risky. I only had half the candle through the point of control. But the thing is, I don't think at this time we had our perfectly accurate market profile working yet. This is a few days ago, but this is an 8-tick trade, and this was worth a lot of money. The thing that really bugged me was I didn't take the retracement and the continuation, and that was also, this is about a $400 trade. This is another one, and that could have ended our day right there. Both quant lines are red, and the key here now, the extra variable that we've added, is that you're below at least 2/3 of the candle. That's why this was a little bit of a squeeze. This is only half below the value area low. And you see the value area low here. Got to go to the right edge. Let's see the 15. This is a 15-tick winner. And this is a nice trade. 2/3 of the candle is below the value area low. And really the pivots are a problem, but they become a lot less when you break that value area low and the pivot's right there. They just walk through the pivots. Now that was a 15-tick winner. Now, I don't think we got all 15 ticks. I think I closed the trade earlier because I don't remember any trade that lucrative that we got. And let's take a look here. Now, here's a trade I wouldn't have taken. We didn't have this working. So I took this trade and it went 8. But I would not. Now, we had the background bias. Perfect. We had the dual quants, and the dual quants are really important. All the correlative markets are heading to the downside, and I was lucky. Before having the point of control, it broke it. But you see what happened here. I lost 5 ticks by trading into the point of control. And I only traded with one quant. What an awful trade I took in the room. There's the retracement, there's the move down, and it gets close to the point of control and goes right back up against me. And this -5 lost a lot more money than this +8. So you just don't want to trade into the point of control. And let's see if we have one more here. Here's a great trade. Look at this move up. Now, see, that's a trade you can't take because you have one quant line green. You're not going to take a short on a green quant line. But you can see how powerful it is coming off dual resistance to the upside. Both the 50 and the quant line are both acting as resistance to the upside. Very, very tough trade. And here is a very, very nice winner right here. 2/3 of the candle is below the point of control. You have dual quants. Oops, running it. And boom, down you go. So basically, what we try to do is we try to provide you with a platform that gives you an accurate assessment of risk. When you take a trade, what is the risk associated with the trade? And you have all the parameters in front of you. Now, everybody has a different risk tolerance. Here's another great trade. I can't remember if I took it. I don't remember taking this trade. It's a break of the POC, and this one has both quant lines, I believe, green in real time. It's got order flow and momentum with you to the upside. And look at the size of that trade. It's a gigantic trade. Now, these are trades you can't chase one candle. When you have the dual quants and you break the value area high, there's nothing above the trade to hold it up. And you can see it just runs. This is a $650 trade based on our ATM strategy. And that's all we would need for the whole day to end our trading. And I think we have another one right here. Let me just go to the right edge. Here's a great trade that comes right off the point of control. Best background bias. It's sitting right on the 15 and the POC. And if you're patient enough to wait for these trades, they're going to pay off for you very handsomely. And you make 7 ticks. Again, that's about a $400 to $450 trade at $32 a tick on 4 contracts. So take a look at this trade. Here's a loser. Now, you know what? It may just squeak through for a winner, but here's the move up. Here's the retracement right here. You don't even come close to breaking the point of control right here. And I think what you're going to wind up taking here is a colossal dump. There's your entry. It goes up 1 tick. It comes right back down. I mean, the market never really successful. And look at that doji. Actually, this is a hanging man. Absolutely no buying conviction on this candle at all. And the market just comes right back in your face. This is why you want to stay away from trading into the POC, value area low, value area high. Trade with the darkest background bias, and always trade with dual quants. And I'll just show you very, very quickly the ES. The ES has 3 quant lines because we've got an enormous number of correlative markets there. And it's basically very, very similar to bonds. Now, the ES, when there's not a lot of volatility and it trades at a narrow range, can get very congested down here. And when it does, just stay away from it and trade with the correlative markets. And here is a great trade right here. Well, let's see where it is on the right edge. On the right edge, here's your trade. If you want to trade 3, and when you have 3 quant lines, this is a nice trade. When you have 3 quant lines, there's sometimes you can trade with 2. You must have the third. You would really like the first. But if you have the second and the third, and I'm not just saying this because this is a winning trade. That's a trade that I would take. Those are enough correlative markets for me. I just wouldn't trade it if the first line was green. And then what I like about it is I have order flow and momentum with me. Darkest background bias tells me my 2 higher time frames are heading down. I have no support below me on this trade, and I get a tremendous trade to the downside. Now I know the risk associated with this trade is a little higher because I don't have a triple quant, but at least I know that when I take the trade. I made an assessment. We break the value area low, and we're going to take the trade short. But look at these trades right here. Bam. They don't work. This one is a hanging candle. It's not anywhere near resistance. This is a hanging candle. Then you finally get your trade right off of the 15, right off of the 15. And you see how it consolidates sideways? That's what you look for. Sideways consolidation in a short trade right off the 15 on dual quants, if you can get them, or triple quants, order flow and momentum with a break of the value area low. You just have to be patient. It's really, and this is a trade I did take in the room, right here, went 14 ticks. Now let's see where the value area low is. See, it traded right back, it broke, and then retraced right back into the point of control. I have enough space to the value area low for an easy first target, and it wound up just going right through. Now the thing that really, and this takes a little bit of time, but the triple quant lines, you have so many correlative markets. I mean, I can just tell you a few of the markets. It says it's bonds, notes, the Russell, the NASDAQ, the Dow, the dollar, and it also, the dollar, and there are a couple of other markets as well. All of those markets are in these triple quants. And when they're all moving in the appropriate direction, you have a very, very powerful trade. It's no guarantee of a win. You still have to avoid the POC and the value area low and high. And there's no reason to take it because you get too many of these really juicy trades. And we're trading 4 markets, so just wait for the juicy ones and don't extend yourself. Here's another really good trade right here. Now, I don't know what time this is. It's 4 o'clock in the morning. Obviously, you can't take this trade, but this is really just for instruction purposes. But look at this trade. Now, I believe in real time you've got triple greens. You've got the move to the upside, the retracement, and what I love about this trade, it's sitting right on the value area high. Tremendous support. And up she goes. Right, we take it on a reversal, we would be out somewhere here. But if you had a bigger ATM, you're all the way up to there. And you know what? This goes, the trade go up. Well, in real time, it doesn't go to the value area high. Let's see actually where it does go. Yep, it breaks it, and up you go. These are great trades on triple quants where the market sits on the value area high. You've got the break of the value area high, retracement to the value area high, the move up on 3 quants. And boom, there you go. Now this was a 5-tick winner on 2 quants that I took. You see, I wouldn't have taken this trade. We didn't have this operational market profile. Would not have traded into the value area low. Would not have traded into the value area low. Would not have traded into the value area low, even though this one ran. And that's what I said. Sometimes the specificity you trade with will neuter a great trade for you. But you know what? You can never cry over this trade when it's going to keep you out of so many losers. And as we always say in the trading room, it's not the number of winners you take, it's the number of losers. And here's a great trade. Look at this trade. The retracement, there's the value area low. You're way below it. Now, you may have actually had a green quant. I don't know if you're here or you're here. I wouldn't have taken it on a green quant, but it ran. So I could show you this really all day. If you have any questions, just let me know. The only thing I tell you, and I'm telling you this really honestly, market profile is not market profile. How it's calculated makes a big difference. And if you overlay other market profiles, you will see that they're just not the same. And the accuracy with which they correlate, the VAH and VAL, will really make a marked difference. A lot of them only calculate on bar close. They're not intra-bar dynamic, which is really key. There's sometimes you get price stalls, and especially on the E-mini, and all of a sudden the point of control will pop right to where you're trading, and you know that you're not going to take a trade there. Sure, I'll show you the 6E. Not a problem. Let me just get rid of, well, I don't want to get rid of that because then I'll lose. Let me put in the 6E template. Now, it'd be nice if I move this to 6E. Now, every single market comes with its own unique quant line. So you can't mix and match the markets. You've got to put the appropriate template in. Okay, here's the 6E. Now, let me see if we have, I don't think I have the market profile in here. Hold on a minute. I don't know why it's not here, but let me just, I can stick it right in. See, the pivots are at, I haven't traded it in so long. I got to change the pivot sensitivity indicator here, and you just go to the RL quant, and there's the 6E quant. We make that new, and the quant is going to be panel 2, and the volume is going to be, this one's going to be 3. Okay, we're all set. All right, there's our, okay, now where the heck is our, you know what, I don't think I brought market profile down. Nope, hold on one sec, I'm sorry. Here's the market profile. And it's already the set, all the default settings are in. So here we go. There's the market profile. So let's take a look on the right edge. You know what? And this is the first time I'm looking at it, to be perfectly honest with you. Let's see how we do here. Now here's a trade. Here, actually, I have two trades on the chart right now. This is the move up, retracement, just about through the value area high, and the quant line is green, which is really important. And then right here, let's just move over to the right edge and make sure it's what I see. Now, that's just not enough. Well, you know, that's a risk assessment, whether you want to take this move to the downside. It's a real tough call. You're just about a half candle through, and you have the quant line here. So let's just keep looking at the right edge. Here's a nice trade. A move to the downside, a move up. Remember, we're retracing deeper into the point of control right here. Plenty of room to the value area low. Quant line is with you. And this is at 9:58. This is at 10 o'clock in the morning. It's definitely a tradable setup. And look at the size of that move. A gigantic move. As long as you have everything with you, you're good. Now let's see if we have anything. All this other stuff is junk. The quant line 0. The 15 is B. Oh, you know, Jerry, that was part of what we did to assess the market profile. It's just one of the things that we use personally. We don't even use it anymore. Now that we've got what we want to do for market profile, we just don't use it. Now see, here's a trade at 6:20 in the morning that we just couldn't get. There's the move to the downside. Here's a break of the 50. It's right into the point of control. It's on a yellow quant. No way we would take it, and it's a big, big winner. But let's take a look at this one. Here's the trade to the downside, right here. You just got to wait, and let me just show you this. Here's a trade into the value area low. Now, it doesn't stop you out, but it bounces. Here's your next trade into the value area low. It doesn't stop you out either, but it bounces. Here, you're below the value area low. Here's your entry on the right edge. So you have to have patience. This trade could have wound up just running on you and you lose the trade. This one could have ran on you and you lost the trade. Now, if you took it here or you took it here, it just so happens you don't get stopped out because one tick above the candle is a stop. It never comes back to grab you. But the safest trade is here, and down you go. And if we look at the right edge, you have another entry here. You're way below the value area low. You have to challenge that pivot, but you're way past the first target. You got another huge move to the downside. Stay with the correlative markets and trade below the value area low. Let's see what else we got here. And here's, now that's not a great trade. You could take it. It's not a loser. I just don't want to give you winners just because I see they've won. Here's a great trade. There's two. There's the move to the upside. There's the retracement. There's the value area high. You got a ton of space. And look how far you go. That 12.50 a tick, that's a very nice trade. And take a look at this trade. These are the ones you just got to watch for. It's a retest of the 50. The market goes up, comes back, sits right back on the 50. It's a tough, let's see how it looks on the right edge. You know, it's half and half. It's a very, very tough call whether you would take that trade. I think I would take it because I've got the quant, I've got order flow and momentum, I've got background bias. I think, and I've got only I'm one tick less than half the candle through the point of control. And then here's that retracement that we just talked about. So you have two great trades here. And then no background bias, tons of junk. I mean, you wouldn't even think of taking a trade here. And I think on this trade, no, this is a nice trade. Down you go, up. You're taking it. You definitely have a break of the value area low here. Your quant line here is going to be red in real time. Remember, you got to move it to the left. And it's not a big trade, but it's a winner. Let's see how this one looks. Here's another one. Move to the downside, up. There's the quant. Got to move it over 1. And you've got yourself a nice winner. This is a better entry, but you don't know that on the right edge. You don't get stopped out. And you got a nice trade to here. Now let's see if this one works based on it. This one's a hard trade. I probably would not take it. You've got your value area low has not been broken. The thing is, the trade's off the point of control. I just would have stayed away. You do have order flow and momentum here. You do have the quant line. If you made an assessment here, it's a tough trade. It's just a big winner. But you know, you're not going to get all the big winners. And let's just take a look at this one. Here's a great trade. Move to the downside, retracement. Here you definitely have a break of the POC. You definitely have a red quant in real time. Order flow and momentum with you, background bias with you, and you've got yourself a really, really nice trade to the downside. And you can see the value. Now here's a trade. It's a risky trade. It's going to give you a first target. If your first target is 4 ticks on a 5-tick candle, which I would recommend, you're going to get a first target. It's not going to go very far, but let me just see one more here. Let's see where we are here. No, I wouldn't take that trade on a yellow quant, even though it's a winner. Let's take a look here. I wouldn't take this trade. It's into the value area high, even though it breaks it and it runs. Let's see where we are here. You see, here's where you sacrifice. That's going to be a green quant. Right here. Order flow momentum. It's a nice retracement, but you got to break the point of control, and I would not take this trade on the right edge. And it's a big winner. But you know what? If you want to trade with sensitivity, you're going to have a lot of problems. If you want to trade with specificity, then you're going to do a lot better. Let's take a look here. Here's a great trade. Right here. The break, the retracement, and the move down. The point of control is red. If you don't take it, you take this one, or you take them both. The quant line's red. Both very, very nice winners. Huge, no. But you know what? They're both maybe doubles. They're not home runs. Well, I'll take them. At $12 a tick, I'll take both these winners. Right here and right here. So, let's see if we got one more here. Here's a great trade. Right here. Nothing to stop you. Now here is a really nice trade. This one, no, it's not. It's right into the point of control. You can't take it. But here's the great trade. The retracement, up. Quant line's obviously red. Down you go. And you just get to be oversold. But a tremendous number of these. Let's see if this one's a loser. I have not really found very many losers. This is going to be a winner right here. This entry here. If you entered a little bit too early, you're not going to get stopped out. Let's see here. Yellow quant, I wouldn't take the trade. I wouldn't take this trade into the value area low. Here's your entry right here. You're going to have to chase the trade one candle. You've got the dot that gives you the authority to do so based on the software. Big trade? No. Take this retracement right here. Now let's see if we, now when on the right edge, you don't have the point of control. You're already at a first target. Never, it does break it, but it turns. So you have two small trades here, both winners. And let's see this one. Now this would be a red quant in real time. This is a really nice winner. And I know it's getting a little redundant, but basically this is what you're looking for. The move back. Here's the value area low. Actually, that's the value area high. And look how much space you get to the point of control. Just gigantic. And I bet you this trade goes all the way to the point, right to the point of control. And I bet you it turns. Yep, pretty much turns right here. So you can take the trade. And if you want to set this, I mean, this is not the way we trade. We would be out here, somewhere in here. But if you wanted to take this trade, let's see where we are on the right edge. On the right edge, it's right off the point of control. With the quant line, you go down, gives you some heat, but you got yourself another small winner. I wouldn't have taken it because the market's too over, because you've got a beautiful entry here, you've got another entry here, and I don't like to take the third retracement in a trend. You're kind of bucking it. The market's oversold. The only thing that makes this a trade you would consider is you've got this strong area of resistance you're trading off of, which is the POC. So you see how important avoiding the POC is when you're trading into it, and how great it is when you trade around it, and how the market responds to it. So, are there any other questions that I can answer? I mean, this has really just been educational, really nothing more. You know, Bob, I can't really do that because they should show right up. If you call tomorrow morning at 8 o'clock, actually Leo's here at 7:30, he'll go into your computer and set them up for you immediately. You know something, Jerry? It doesn't make any difference because here's the thing. That's a simple assessment I could only answer if you said to me, well, do you have background bias with you? You have order flow and momentum with you? Are the 15 and the 50 with you? I don't think there's any problem in taking a trade above the value area high or below the value area low, unless there's we still have to respect overbought and oversold markets. But so you have to respect that. And remember, it's a little riskier to take a trade, to take a third retracement in a trend. Even if you're taking it off an area of support or resistance like the VAH or the VAL. But here's the thing that I just want to throw in. All the systems that use an oscillator to get you into a trade, oscillators don't work. And here's the reason why. And I've always wondered, we did, when we first started this platform, we looked at an oscillator and it just gave us no predictive value. And we couldn't figure out why, and now I understand. If an oscillator is telling you that a market is oversold, for instance, and the distance from the 50, which is here, or the value area high to the point of control is this far, it doesn't matter what the oscillator says. It's going to go oversold very quickly, but you know that if a perfect setup comes, you can go short because you've got all the space. Here's where you have a problem. But to try to go long here, right above the 50, where the oscillator is going to tell you, oh, you're not overbought, and you trade right into the value area high, you're going to get stopped out, or potentially get stopped out. This is why the oscillator is so useless. It's because volume is asymmetrically distributed around the 50. And when it is, and the oscillator doesn't take into account that asymmetry, that zero value on an oscillator makes the assumption that volume is equally distributed above and below that zero line, and it's not. So back in the olden days, the oscillator seemed like a great idea. Take the distance between the high and the low, or the high and the close up on a long, and the high and the low, or the low and the close down on a short. And as long as that low continues to get bigger, the move is gathering momentum and it's moving to the downside. But you know what? If you're trading along into this value area high, that momentum's going to peter out awfully quickly when it bangs up against a brick wall. Now, we don't use an oscillator in our system, and we don't care about oscillator direction, and that's why. And the market profile has solved the dilemma for me, why the oscillator doesn't work. And there's systems that base their entry on the Williams R, relative strength, all different permutations of oscillators, stochastic, whatever they are. They all cannot work if volume is asymmetrically distributed around the point of control or around the 50. And now you know why. Yeah, we did. We did, Mike. If you didn't get one, actually, I sent it out like 3 times. If you didn't get one, just send us an email. Leo will send it to you at 7 o'clock in the morning or 7:30 when he gets in. We sent out this is our final update, and this works terrific. Now, I'll just tell you, if you're interested in our software, we do have a special. We don't have it posted on the website. All you have to do is send me an email, or if you want to give me a call, I'll be in the office another 40 minutes or so. You know what, Mike? Then just give Leo a call. Somebody else really, thank you, Bill. I appreciate it. Somebody else mentioned that too. You should see them, but he'll have them running for you in 30 seconds. I have the same package that you do. He just emails it to me, and I install it. I mean, he's 30 feet from me, and he just emails it to me. So if mine works, yours should work too, because I get the same package that you do. I have nothing different. We're very, very soon going to be. If you want to take 1 second, I'll show you something really cool. Here is the Eurodollar. Now, I don't have a live feed because my FXCM data feed is not connected. The last time I hooked it up, look at this great trade. You break, retrace, and down you go. A lot of pips on the Eurodollar. And I have found that the Forex markets are not easy to trade. And look at this great trade. The move up, the retracement, right to the value area high. We just finished the first Forex Quant Line. Quant Line is green, up you go for a win. So we're actually going to turning the Forex markets into look at this trade. There's the break. Now, you can't get this run. Retracement below the value area low, and you get down for a nice move. So the Forex markets, we've tweaked the indicators a bit, but it's essentially the same core platform. And if you want to trade, this is going to trade the Forex great. And the only other thing I'll just let you know is I've eliminated on my charts, just for your own personal edification if you have the software, I don't bother with the histogram. And we have it defaulted not to show it. we're not really market profile traders. We trade support, resistance, and the POC. There are market profile traders, and that's all they do. They have a market profile in a 60-minute, and if the 60-minute is up and they break the value area high, it comes back, retraces into the value area high, and then they go long off it. As long as they're in the same direction as the 60-minute trend. We are not like that. So if you want to put the histogram up, you can. We perfectly defaulted it to the left side, so it doesn't get in your way on the right edge. But it doesn't have any value for me. And we purposely didn't put in nodes. Some of them put in nodes, and we use each session of volume. So everyone will collect the same amount of volume, and their market profile when they're in the trading won't be identical to mine. We will all be working off the same accumulated volume. And that's the other thing that makes a lot of the other indicators inaccurate. They accumulate data based on how long your chart's been open. If your chart's open for 4 hours, and then you close and then reopen, their points of control, value area highs and lows, will be completely different than mine. If you close, reopen, you'll be identical. You will always have the same value, and that took a while for us to do. So they are platform open, independent, and they should correspond exactly. So that's it. Like I said, we do have a special. If you're interested, let me know. If you just want the market profile indicator, we will send it. We will give it to you. It's $129 just for the market profile. If you want it, we will sell it to you. It's the first time we've ever sold a unique indicator, but there's no better one out there, and it's really up to you. I think no matter what system you use, it will augment your trading and increase your precision and increase the predictive value of your trading. So I'll be here for an hour or so, whatever you want to do. But listen, I want the software to sell itself. I don't want to have to hawk it. But my primary role here, I really felt, was to teach you how to trade it, even if you use a different market profile. Now you know. Trade in the direction of the long-term trend and use the value area high, low, and point of control as support, resistance. Trade off of them. Never trade into them. And you're really going to wind up. Take a look at this area of congestion right here. This is just what you just don't want. You want to avoid. This is really, really going to mess up your trading. When you trade into that value area low, just don't do it. Stay away from them. Give them plenty of room, and your trading is going to be much, much better. Same thing here. I don't want to beat a dead horse, but I just really want to. Right here. Look at all the congestion caused right here. Now, eventually it breaks, and you can chase the trade up. But then you've got the point of control. This is just not a tradable setup. Does it work? Yeah. Does it go 5 or 10 ticks? Yeah. But you know what? You're working with probabilities, and you want to keep the positive predictive value of your trades exceedingly high. If you take these kind of setups, you're going to wind up taking a lot of losers where it just bounces right back in your face. So you can see it never really does go very far. And ultimately, based on market profile, it turns the market. And you see that a lot. Back to the point of control, market turns. And ultimately, you see the kind of misery you're going to have if you keep trying to challenge that. And this is the last thing I'll say. I'll say, okay, added market profile and see lines. Do I need add market profile? I'm sorry, Mike. What does that mean? No. Do not use the helper. Do not use it. If you got it in the package, just let it sit there and don't use it. You do not need it. It doesn't do anything. If you add it, it won't change anything. So that's all. It's really key. So listen, everyone, have a great evening. I hope you learned a lot. Listen, Leo, Hey, no problem, Bill. You know, Leo set those default colors as gray. I switched mine to magenta. You can put them in any color you like. See right here? I put them at 3, magenta, magenta, black. You can put them any color you want. Whatever, just whatever stands out for you. And at first I had them dotted, I made them all solid, and I made them magenta, magenta. But you can do whatever you like, really. I took out the price markers. I put out the display and data box, and you see the histogram. I made it false. I took that out because I don't want to deal with the histogram because I'm not you use it to trade. Okay, everyone, have a great, great Sunday evening, and I wish everyone tons of luck in the market this week. And let's us be the commercial traders that take money from everyone else, and let's not let anyone else take any money from us. So have a great evening. If you do go to the website, I just want you to know you're welcome to come in for a free trial. Let me just show you that really quickly. Just go to I don't even have to do it. Just go to rightlinetrading.com. You'll see a link to a contact us page and a link to it for a free trial. We welcome you to come in. Absolutely. If you have a lifetime license, LG, and you don't have the profile, let us know and we'll send it to you. It does. A lifetime license right now guarantees you all free upgrades and add-ons. So if you didn't get it, you should have it. Just send us an email and I'll make sure Leo sends it to you. And that was an error. But if you don't have the software, it will be. We're very soon going to take that guarantee out because it's costing us too much money. And I mean, Leo worked 10 days on this market profile. And basically, for all the people who have the software, we don't make anything because we always give out our upgrades. And that promise will always be kept for the people that own the software. If you own it now, you will always get free upgrades and add-ons. Always. We'll never break our promise to you guys. So listen, everyone, have a great Sunday. And hopefully I'll see you in the room on a free trial. And if you're interested in the market profile, just give me a call. If you're interested in our special, give me a call. Either way, I wish you the best of luck. Everybody take care. All right, Andy, I'm done.